everybody, what's going on? It's another weekend, another edition of our Stock of the Week. Hope you guys are having a great weekend. It's a hot one where I live in Texas, and so hopefully everybody was staying cool a little bit this weekend, but hopefully our Stock of the Week will be something that stays hot, at least in the direction that it's been trading. So today we're going to talk about Disney. That's right, the House of Mouse, Disney Plus, Star Wars, Marvel, all that fun stuff. And really what's happened to Disney stock in the last 12 to 18 months. We're going to go look at a chart in a couple of minutes, but I think that the thing to take from this is that there was about a 40% decline once COVID happened, and then it rallied up to new all-time highs. But since then, it's really, really fallen sharply off a cliff. Now, there is a lot of kind of hope on the horizon, and I've seen a lot of articles recently about how Disney is poised and is a good buy at this level. Well, it might be. But I think that I'm going to stick with the trend, right? The trend is my friend till the bend at the end. And I think the trend's at a pivotal point. And if we break down from below where we are, I think there's continuous room to move down. Now, couple that with, we saw what happened with Netflix subscriber base. The question is at the next earnings report, what's going to happen with the Disney Plus subscriber base? Has the strong addition of subscribers, is that going to continue? Or are we going to see that slowing down the subscriber growth and maybe even seeing a loss of subscribers? Don't know. The theatrical releases, Lightyear was a little bit of a bust, was expected to do a $200 million opening or box office, and it was about 155. So had a little bit of a disappointing box office run. And then Thor: Love and Thunder, although today is the opening weekend of Thor: Love and Thunder, just getting the early news in that it opened up at about 143 million, which is a pretty strong number. And so cinemas in general seem to be back, and we are getting a good number out of that Thor movie. So my point behind this is that there is some hope on the horizon for Disney, but the trend continues to be down. And so what we're going to do is look to see, how can I make a play if we continue to drop, because our volatility is at a pretty good spot. So let's go take a look at the charts. So here I have a weekly chart of Disney, and I pulled up a weekly chart because I wanted to take a look and talk about where we saw the drop from when COVID happened, and we dropped from about 155 all the way down to around $80 a share. And then it rallied up to over $200 a share at its high, and we're now sitting around 95.86 as of Friday. Now, what we can see very clearly is that in the last 4 weeks, we've kind of hovered around this $98 to $95 kind of price region. We've hovered there for the last few weeks, and hovering there for the last few weeks is not necessarily a very strong indication that we're going to, rally up. And so we have had a couple of weeks in a row where Disney has rallied up, in this downtrend, but I certainly still have lower swing lows and lower swing highs. So moving over to the daily chart, what I'm going to take a look at and pay specific attention to is this area down here where we have clearly hit a support line right there at about 91.71. The other thing that I'm paying specific attention to is that I do still have lower swing lows as well as lower swing highs on the daily chart. So what this tells me is that the market has really tried to gain some momentum in Disney, but has been unable to do so. And so our anticipation would be more than likely would be that price would continue to drop from this region. Now, you do have a little bit of an area up in here that could serve as a little bit of a supply area if price comes back up into this region, this 107.29 by 109.53 area. However, as I look at those two levels, I don't know that we're going to make it back up to there anytime soon. And so a breakdown below this 91.71, I think, is probably the most likely trade. Now, when I take a look at my current volatility, taking a look at my volatility channel, we can see that we're trending right now in the dead center middle of our volatility channel. And what this does is shows me the implied volatility over the last 365 days. It charts the highest high and the lowest low, and then gives me a range of the top third and the bottom third. And then this is sitting here right here in the middle. So that tells me that I'd probably be better off looking at a spread. So looking at my spread trades in Disney, let's just start fresh. Menu, positions, new empty position. And the position I'm going to do is the Disney short play. And it's going to be in the underlying stock of DIS, which is Disney. So let's add an options trade. Now, when I add my options trade, up here I've got my weeks of expiration, 715, 722, 729. As I arrow over, I continue to move over. I'm going to take a look at the September options positions. And the reason I'm looking at September is because I want to give myself enough time for price to be able to run down, because I think that we could retouch the $80 a share level if we continue to drop. And so when I take a look at this, at looking at a spread trade, I would look at the deltas, and I see that the 95 puts have a delta of 44. The 90 puts have a delta of 32. The 85 puts have a delta of 22. Now, what am I looking at here? Well, if I buy the 95 put and sell the 85 put, I'm going to have a net delta of about 22, which is just off of what I want. I would like to be around 25 is the ideal number. So I can spread this out just a little bit and do the 95 by 80 as my bear put spread. Or I could do the 90 by 80, which is the 32 and the 15. Not quite going to be enough either. So I got to do the 95 by 80 bear put spread. And when I do this, this gives me a net delta. I've got a 43 delta, a 44 delta here, a 15 delta here. So that gives me a net delta of, if I take the 15 from 44, I'm looking at about a 31 net delta, or 29 net delta, excuse me. And so, and then the other thing that I always want to do is take a look at my open interest. Well, open interest is not going to be an issue on a Disney stock position. So now looking at this, I'm going to be able to buy the 95 put for $5.75. I'm going to sell the 80 put for $1.51, which is going to be a net debit of a little over $4 and what's that? $4.24. So my spread is $15. So I've got a good spread on here where it's going to make logical sense. Now, looking at the P&L on this position, my P&L says that I'm not really profitable until I drop below $90 a share on expiration. That's going to be really where I want to be profitable, is below that $90 a share region, because I've got to pay for my debit. Now, I don't plan on holding this all the way through to expiration, but let's say that I hold this until the middle of August. Let's look at this position in the middle of August. So if I hold this to the middle of August, my assumption would be is I genuinely believe that this can get back down to $80 a share. And at $80 a share, you've got on my table here, at $80 a share on August 19th, it looks like you've got a P&L of $701. So $701 at $80 a share. Now, I think that going back and looking at the chart, that a good stop loss position upon a breakdown above that level would be a stop loss above this swing high at about 100. So 100.55 would be a very good stop loss position. And so if we get to 100, looks as though, right at 90, right at 95, we're at $101 as a reward to risk. So 95 would actually put us at a little bit closer to where we are right now. But remember, we're not getting into this until we get the breakdown below this line. So while this is a pretty good picture as to what it looks like today, it will certainly look different when we would actually execute this position. But overall, I think this gives you a pretty good trade and a pretty good setup in terms of where we think price could potentially go. Now, from a theoretical standpoint, it's saying that I've got about a 59% probability of losing money on this trade. But remember, that's based on the implied volatility as it stands today and does not take the current trend into account in any way. So what we're doing is we're adding the trend and the charting to our options analytics to give us what I think is a pretty good setup and a pretty good trade. Now, if we don't break below those lows, then you really have no entry anyway. And that would be if Disney starts to create a base and rallies up from here. So hopefully that makes sense. If you guys have any questions, please feel free to reach out. Let us know. Send us an email, support@tradersarmy.com. Until next week, everybody, I hope you have a great trading week. I will talk to you soon. See ya.